Hey everyone, this is Eric Burkholder here with Jordan Bradford with Burkholder Wealth Management, and we are coming to you today to talk about the election.
Yeah.
Big midterm election coming up next week. We encourage everyone to vote, regardless of your view. You know, we think it's important civic duty to get out there and vote, but in our world, the question we always get is, what impact is the election going to have on markets and my investments? Probably one of the most common and popular questions we get every midterm, every presidential election. Obviously, it's understandably a very important question. And so we want to put out a short video and just give you all some data and maybe help you to make some good decisions coming up here in the next few weeks. So, Jordan, let's just start off. What impact does the political party or who wins the midterm election have on stock market performance?
Yeah, so obviously that's a big question, and it is a question that doesn't have maybe the most straightforward answer to it. But I think, the easiest way to answer that is, elections do have some impact on markets, but the challenge is that so do thousands of other inputs that the market is receiving daily. So one of the things that we believe in strongly is that, market pricing is reflective of the information that's available to the markets on a minute-by-minute basis. So, the markets are responding to the information that's out there, and that's where we're seeing price movement throughout the day. So I think to kind of help us understand how that impacts the market is to maybe think about how, the market's making essentially minor predictions on a minute-by-minute basis throughout the entire year. And it's happening all the time, and the market's basically collecting all this information from, who the market thinks is going to win the election, to what's happening in Ukraine, to global logistics issues. Anything that you can think of that may have an impact on the market probably is, but I think the challenge comes in how do we disseminate that data and understand, can we predict it? And I think the answer to that is really no, we can't, because we can't respond quicker than the market can to the information available.
Sure, right. So, in other words, just give it to me straight. Do I want Democrats or Republicans to win next week?
I think there's no real good answer to that. I would say that, ultimately what we should all really want is that the election to come and go, and we can move on with the rest of our lives.
Yeah. Well, give me some of the data. Who's done better historically?
Yeah, so if we look back to 1987, so we go back about 35 years. I think that's a good amount of time. 35 years is a good number because that takes us back to 1987, which is the same year, roughly a year or 35 years ago today almost. We had Black Monday, where the market was down 23% in one single day. So that was a pretty bad day, one of the worst days in market history, actually. Yet for the year, there was still a positive return in the market. And for what it's worth, during 1987, the Democrats controlled the House of Representatives. Now, I don't necessarily take anything from that and apply that forward-looking, thinking, okay, that means that we could have a really bad day but a positive year. Because I think if you look back at some major years in the past, such as 1987 when we had Black Monday, we had the tech bubble in 2000 to 2002 in that range. That was 3 straight years of negative returns, and yet Republicans controlled the Congress during that time. And then we can jump forward a little bit further to the financial crisis of 2008, and that was also controlled by Democrats. However, about 12 years in advance of the financial crisis, Congress was controlled by Republicans. So I know it's a lot of information, but I think what I really want everyone to take from that, and I think what we take from that really, is that it's really difficult to predict how the market's going to respond post-election to a particular party winning.
Right.
But I do think there's some real positive news in this, though, and that's that in election years, so midterm years specifically, because that's the year we're in now, right? It's a midterm, not a presidential year, but in midterm election years, there have been 24 of those dating back to 1926. 15 of those years we've had positive returns in the market, and only 9 of those years have we had negative returns. I think that really makes a lot of sense because we know on average markets go up over time.
Right.
So when we look back, nearly 100 years, I would expect we're going to have more good years than bad years.
Yeah. Basically, when you break it down, it sounds like a distribution just like any other year. I mean, we've got about 3/4 of the time the market goes up, and it seems like that happens whether Democrats are in control or Republicans are in control or split.
Yeah.
And I think, to your point, there's a lot of other things out there that are affecting the market.
Yeah, and I think, midterm election years, I think you hit the nail on the head. Not a whole lot different, realistically, from the natural distribution of returns in other years in the market. But I think the real silver lining here is the fourth quarter of midterm years and the year following a midterm. So let me break that down a little bit. So in the fourth quarter of midterm years, where we see an average fourth quarter return of 6.5%. So just to do some quick math, if you annualize that out, that's an annualized return of about 26%. Yep. Now, in no way am I predicting that we're going to get a 26% return or that this year is even like that, right? We've seen the market actually down quite a bit to this point.
Right.
But, that's a lot of data going back, and I think that it shows that post-elections, the market settles down a little bit. And oftentimes settles down in a really positive way. And I think that that's highlighted extremely well in the years following midterms. So I mentioned we have 24 midterms since 1926, which means we also have 24 years following midterms. And in those years, 22 of those years the market was positive, and in only 2 of those years did we actually see a negative return in the market.
Yeah.
Which is a big deal, right? That's out of 24 years, 22 positive return years, 2 negative return years. And for what it's worth, those 2 negative return years, 1 year was controlled by the Republicans and 1 year was controlled by Democrats. So, I think when you look at that, it's hard to really get a good guess.
So you're not helping me at all on who I should vote for next week if I want good market returns.
Yeah.
What I'm hearing is markets likely, based on data, likely to go up regardless of what happens next week.
I think that's the number one thing I would take from it is that, following an election, regardless of who wins, the market generally, historically, has gone up. And I think that, the best thing you can do with your money is invest really wisely and invest based on, good historical data. And I think that all the historical data points to, on average, markets perform well post-election. Regardless of outcome, regardless of what year it is, that is generally how markets tend to react following an election. And I think that, that's a really good sign for us because the election's coming up here really, really quickly. Yeah. And so, hopefully we have some really positive market returns on the horizon.
Yeah. And, obviously nothing's guaranteed, but we always talk here that the market likes information, regardless of what that information is. Now, less uncertainty is better than more. And so you have more uncertainty all the way up until the election. And then immediately after the election, we at least know something about the next 2 years.
Yeah.
And so the market companies kind of now know what to anticipate, and that tends to be a good thing for markets. And at the end of the day, I think most people out there, I'm going to go to work the day after the election, regardless of what happens. And companies are going to be out there trying to make money. And, we've both done these videos on, past elections and years, and we look at, tax regimes, interest rate regimes, you can break it down any way you look at it, and it pretty much is a wash for based on what party's in control. And the great data that you just cited, which is hey, I want to be invested in a post midterm election year because the markets go up on average. So
and I think one final closing note on my end that I think is a really interesting fact is if as a client you said to your advisor, what if I were wanted to be only invested when Republicans controlled Congress or only invested when Democrats controlled Congress? And you actually applied that over the last 35 years. If you got out of the market every time Democrats controlled Congress, you'd have a positive return over the last 35 years. If you got out of the market every time Republicans controlled Congress, you would also have a positive return. But you know what beats both of those is if you had been invested throughout all of the last 35 years, your return is nearly double what you would have been if you were trying to time it based on political party. So I think that, as we look back at history and we look forward to, what are likely outcomes in the market, I think that, regardless of who wins, I think the best strategy is always to stay invested and vote at the ballot and not vote with your life savings.
Yeah, absolutely. Great data. And as you all out there know, everything here, we're driven by the data, and we're not saying elections aren't important and you should do your research, vote for who you think will do the best. But when it comes to investing, there's no evidence that one party has the win on market performance, and so we really want to make decisions based on your life circumstances, on your risk profile, what you're trying to accomplish. Those all do make a very real difference on performance and investment experience. So regardless of what happens next week, stay invested, based on your personal life circumstances, and it's going to be okay. I think that's a good ending message. It's going to be okay, regardless of what happens. So, but let us know if you have any other questions out there that we didn't cover today. I think Jordan hit some fantastic data points there. Hopefully that maybe calms some nerves about next week. And shoot us some information. Also, we're going to put some links down in the comment section on some great follow-up data that if you want to kind of dig into the details, so check that out as well. And that's all we got for today. So until next time, we will see you on the next video. Bye.